Hello everyone and welcome back to my channel. Last week we did not make a video. It was a pretty busy week. We were celebrating my beautiful fiance's birthday. She is a 4th of July baby, so it was an amazing time. It was a great celebration. But we're back and there's a stock that I've been taking a lot more seriously. I want to share with you and I'm starting to load the boat on that stock. With that being said, I think the market is missing out on it. So I'm wearing that You're Killing Me Small t-shirt, from the movie Sandlot, a classic. But before we get to it, the whole point of tracking my Roth IRA is to outperform and beat the S&P 500 by picking safe companies that are going to be safe and continue to grow. So let's take a look at the progress so far. So year to date, we're up 27% on my Roth IRA. And from July to actually July now, we're up almost 40% on my Roth IRA. Let's compare that to the S&P 500. Year to date, the S&P is up almost 6%, and year over year, so July to July, is up 11%. So we're still outperforming and still beating the S&P 500. So goal is still accomplished. So what is that stock I've been buying? I mentioned it last video, but now I'm actually taking it a lot more seriously. And that stock is United Healthcare. As you can see, this stock was almost a $600 stock. Actually, it was a $600 stock, and we had a major crash. So, United Healthcare, one of the largest healthcare companies in the world. This company was always foreseen as a growing company that's beating the markets. And look at this beautiful chart. And now we have this dip. So it's facing some allegations, and now with the big beautiful bill, some Medicaid cut, and all that stuff. But I really see a strong value now that I'm looking a lot more into this company. So as you can see, this company is 50-week 2-week high was $630. 52-week lows is $250. So we're not technically buying the lows, but still in the low 300s. It's almost 50% loss from what the market cap was just a couple months ago. And if you take a quick peek, the insiders are buying heavy. And we'll talk a little bit more about that. But people buy only to make money. People sell for many reasons. Kids went to college, they got a divorce, they bought a house, they need a yacht, they need a boat, whatever. Millions of reasons to sell, but people technically only buy when they want to make money. And if you have the CEO buying a lot of shares with all these allegations going on and potential lawsuits, does that really make sense? Do they know something that we don't know? Which is presenting us with a big buying opportunity. As you can see, all these directors and CEOs are buying. So what am I doing? I am buying as well. So my allocation to this stock has went up. Now we have around $900 in United Health. Remember, this is my Roth IRA. I'm also doing separate buys in my other accounts. So I'm loading the boat on the United Health, and it pays almost a 3% dividend. It's almost as high as it's been in the longest time. So let's look at the balance sheet for United Health. This company, their revenue, they're growing. So in 2020, their revenue was $257 billion, and now is $400 billion. But quarter over quarter, the net income is going down because, they're having these lawsuits and all these expenses that are incurring, and Medicaid is being cut. But this company, if you look at the balance sheet, there is no debt. The total assets outweighs the total liabilities. So if everything goes to haywire, if they sell the company, they're still making a profit. So to me, a balance sheet like that is beautiful. And if we look at the recent earnings that the company had for quarter one, they're talking about how they adjusted their earnings. They thought they're going to make more money. So it's supposed to be $26 to $26.50 a share. They ended up bringing it down by a dollar, like $24.65 to $25.15 a share. But what's really big for me is we're looking at this company that lost 50% of its market cap. So you cut the company's price in half. Well, if you look at the revenues of $109.6 billion, which grew year over year by $10 billion. So this company is growing. Consumers served by United Healthcare has increased by 780,000 people year to date. And the Optum Healthcare continues to expect to serve 650,000 new valued care patients in 2025. So this company is still seeing a lot of growth. If you think about it, a lot of employers are using United Healthcare Group for their services. They have Optum. And when I was doing my research, I found this video from 2 years ago, and I want to share it with you. I think is a hidden gem and explains to the vertical growth and how United Health is growing. So let's take a quick peek.
A United Health customer could feasibly navigate the healthcare system without ever leaving the United umbrella. They could have United Healthcare as their insurer, see a doctor that works for Optum Health, and have their prescriptions covered under Optum Rx. They may even pay their medical bills using Optum Pay technology.
United is a unique company in that while they're one of the largest managed care companies with over 40 million people having health insurance through them, that's really only half the business. The other half of the business, which they call Optum, are a series of services businesses, many of which service their health insurance members, but they also service other people.
Optum can be split into three general businesses. Optum Health, a series of physician practices. Optum Rx, which is a pharmacy benefit manager, the so-called middleman between drug manufacturers, insurance companies, and pharmacies. And Optum Insight, which is a data and information business that focuses on analytics to monitor things such as cost and manage risk.
Think about Amazon or Apple. The way these tech companies create this sort of virtual ecosystem that you can stay within, that's what these healthcare companies are trying to do in terms of being able to offer you not just the.
So we just talked about all these new customers and people in healthcare, like employers using United Health. Think about that and think about that ecosystem they're saying. Like kind of like Amazon, you use a one-stop shop for almost everything. So imagine what United Health has been doing. This was 2 years ago. So all this is in for tuition is actually in play right now. So they're buying out doctors' offices, they're doing the prescriptions, they're doing the data analytics, and then they also have the insurer side. So this company is very integrated. And as you know, I like buying companies that have pretty much an ETF, multiple businesses in one company. And United Health is basically that.
Insurance, not just the pharmacy benefits, but also the medical care services, so that there's more coordination and hopefully people get healthier because it's all tied together.
The diversity aspect of its business makes United Health an attractive stock for investors.
The health plan arm of the company works synergistically with Optum. The improved medical cost then fuels their health plan growth and their profitability. And that can then drive the innovation both through a build strategy organically, or they can do targeted acquisitions within Optum.
United Health set a precedent with its growth strategy, which has now been adopted by other major players in the sector.
What you've seen in this kind of space is because of Obamacare and the medical loss ratio, which was basically a profit cap on insurers, the insurers decided that to get around the medical loss ratio, they would buy providers and adjacent businesses. So that's really when United Health Group's Optum subsidiary really expanded their pharmacy benefit manager. They started buying doctors' practices and software and analytics firms.
When Obamacare came into view in 2014, a lot of United's peers said, oh, we've got to get bigger in terms of being insurers. So you saw Aetna and Humana try to merge. You saw Anthem and Cigna try to merge. And those mergers got tied up in antitrust because it was too much in the same area of integration. What United Health has done is they've done what we call vertical integration. So they kept buying smaller companies and building them into the Optum services area. And because there wasn't that sense of, well, United Health isn't really the biggest physician practice at the time, they were able to buy those, and they didn't really raise any concerns with the antitrust regulators.
The hundreds of deals United Health Group completed over the past decade.
So that's what's beautiful about this company. They were able to vertically integrate versus horizontal integrate. So they're able to buy companies so they can make this big ecosystem, and they were able to establish that. And there's the thing about being the first mover advantage. So they're the first people to do that in the market in the healthcare field. You know, CVS and all these other companies they mentioned are doing it now. But United Health has that first market mover advantage where they were the first ones to start this. They created all these verticals long before the antitrust, so they're very well embedded into the ecosystem, and it's very hard to get rid of the largest health insurer in the world. And now they own doctors' offices, they own prescriptions, they own all these data analytics. So this company, we're buying it at a steal. If you're really looking at it, this company has potential to at least double your money. And just remember, people only buy a stock just for one reason. That one reason is they would think it's going to make them money. So I don't usually listen to Jim Cramer, but I really enjoy his take on this, and he brought up a very good point, which what I've been highlighting.
So exciting. Yes. Except if you're a shareholder of UNH, it has not been exciting.
Wait a second. People sell things for many reasons, right? They get divorced. I don't know about that. They get, maybe something happens in their family. They need money. But David, why do they buy? Sometimes they buy because there's a bargain. Now, typically these insiders, maybe they buy like 50, 100 shares. Well, how about if you bought your Stephen Hemsley, returning CEO, who acquired 86,000 shares at 288. That's pretty good, 25 mil.
Give me a 5-year chart, by the way, guys. 5 years, just to put this in perspective. Sorry, go ahead.
And then Kristen Gill, director of 3,700 shares. Timothy Patrick, director of 1,553. The CFO, come right in. The CFO's in there buying the heck out of it too, 5 million. So I just say to myself, if they really knew, like the journal says, that they're being investigated criminally, that's a very big buy that would obviously go away.
No, without a doubt. I mean, I asked for the 5-year. 10-year still shows.
That is a very valid question. You're talking about the new CEO coming in and spending $25 million on a company with all these regulations and fines that they're supposed to get. And they have the CFO spending millions. So millions of dollars of buys. It's not like a small portfolio, a portion of their portfolio. We're talking about $25 million by one person. So yeah, I just want to be along with that journey. I looked into UnitedHealth. I'm very heavy into tech. So I think this is a good company that utilizes tech and is so embedded into the ecosystem, into the healthcare aspect. And at these prices, I think UnitedHealth is a steal. So the next earnings call is going to be on July 29th of 2025. So I'll be looking into that, and I'm very excited to see what they say and the plans. So my next thing I want to talk about, my other portfolios, I'm a Tesla shareholder. I think Tesla has a beautiful future with the robotics and the self-driving. I think it's a lot more than a car company. But we have Mr. Elon Musk that keeps getting himself involved into politics. And as an investor, it's starting to get a little bit annoying. Every single day we have to worry about a tweet, and this is hard-earned allocations that we're putting in. So I don't know what I'm going to do with my Tesla position. I still believe in the future of the company, but we need Elon on the front lines to focus on his companies instead of politics, because at the end of the day, that is taken away from the progress of Tesla and everything. So kind of pretty much my idea.
Reaction, which right now, Phil, shares of Tesla down by 5.8%.
Understandable, because I think a lot of people are saying, what's he doing? Where's he going with this? And Tesla investors, to a large extent, have always given him a lot of rope to go off and to do and to say whatever he wants to say, because their belief is, look, the man has come up with some incredible companies, whether you're looking at Tesla, whether you're looking at SpaceX, and has done things that a lot of people scoffed at in the past. But now that he's revisiting the idea of politics in terms of forming a political party, it raises a bunch of questions. I mean, look at his comment in terms of, what he wants to do with the American Party when he posted on X saying, when it comes to bankrupting our country with waste and graft, we live in a one-party system, not a democracy. Is that by itself going to bother a Tesla investor? No, but he wants to form a party, which then raises the question, wait a second, what are you doing with your time and your attention? You're trying to form a political party? It would, in theory, target 2 or 3 Senate seats, 8 to 10 House seats, and the goal is to have enough leverage that they could steer legislative talks, whether with the Democratic Party or the Republican Party. Not surprisingly, Donald Trump said that Elon Musk is off the rails in terms of his comments. So This is one of those things, guys, where you look at it from a Tesla investor perspective and you sit there and say, what about Tesla? We wanted you to work on Tesla. That's what we think Elon Musk is best at. And that's the reason that shares are under pressure right now.
Yeah, I mean,
thank you. Like, all the things he's talking about, one, takes away his time from focusing on Tesla. You're the CEO. You're supposed to be focusing on these companies. Tesla's still growing. It's growing at a massive rate, and especially where he wants it to be with the robotics and humanoids and self-driving. You need a CEO that's focused on the company, not one that's focused on politics. And all these ambitions in the political game cost a lot of money. What is he going to be doing? How is he going to be funding that? Is he going to be diluting Tesla stock, Tesla shareholders? Are we going to be technically funding his political dreams? So as a Tesla shareholder, I don't think this is good. And I'm getting tired of it. I thought we were done when he said, Trump is on the Epstein list. I thought that was the final straw. I know he's mad about the big, beautiful bill. And yes, it does cause a lot of spending, but it's time for Elon to focus on Tesla.
look, his intensity and his unwillingness to ever take no for an answer, to be shut down by things, is part of why he's so successful.
Without a doubt.
But
correct.
There are questions as to the limit of that and knowing how to prioritize and what he should and shouldn't be going after.
Yep.
That I think are the big issues here too.
Yeah, and I think Dan Ives summed it up best with his note that he put out. Dan Ives, look, let's be clear here. He is a Tesla bull through and through. He thinks that Elon Musk is going to go much farther and Tesla is going to go much higher. But in his note, he said what I think a lot of people believe in terms of when they look at Tesla as an investment. There is a broader sense of exhaustion from many Tesla investors that Musk keeps heading down the political track. Becky, over the weekend, 4 or 5 different people in different situations, whether I was out at an event, out at a store and stuff, they would stop me and they always ask about Elon Musk. You know what they all said? Pretty much the same thing. What is he doing? What is he doing? And that is at the heart of the question surrounding Elon Musk and Tesla. And that's why the stock is under pressure, because people are sitting there saying, are you focused on full self-driving and fixing, the concerns about sales slowing down?
So yeah, right now I have to think about what I want to do with my Tesla position. I still believe in the company, and I think if we're going towards the humanoid route, it's a lot of potential for Tesla, and it could be a really, really massive company with a lot of gains to my portfolio. But I want to see what Elon does. Is he just mad because the big, beautiful bill got released, or is he really gonna take this campaign thing seriously and dilute shareholders? And that would be a huge red flag to fund this political campaign. So that is my thoughts. UNH is a great buy. I hope you enjoyed this video, and I'll see you on the next one.